It's going out there. It's October 5th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. My wife and I went to the Seminole Casino. It's located in Hollywood, Florida, this weekend. The last-second getaway that we both needed. I used to do a lot of work with the kids since driving them all over the place, now that one of my daughters is actually going to school in Jacksonville, which I told you about. And a lot of news on our part, right? We just broke the news that we're going to be trading on a tZERO platform. It's going to provide us much more liquidity. They're the biggest in the world, trading security tokens. Lots of fantastic news coming out. More exchanges being launched. They call alternative trading systems, ATSs. Not allowed to call them exchanges yet. They're regulatory, but they are basically, exchanges. So lots of fun, lots of great news, going to provide lots more liquidity for our token, which means, we're going to be able to grow the company a lot faster, where we can acquire companies using our stock or our tokens. Again, this is equity stake. Hire more talent. We could raise money through it, and that's what we want to do here. We want to accelerate that growth. That's why you go public, to accelerate the growth. And looking forward to the months, years ahead. That was a major milestone for us. Again, it's just part of the process. It's not nothing that we should high-five each other about. We still have to work, a lot of work. But now we're in a very, very good position. It's going to really, really grow, and that's going to be exciting. Team's excited. It's awesome. If you're a shareholder, you don't have to do anything. We're going to email you. There's going to be lots more news coming out, just in terms of restructuring the token, putting on a different blockchain. Again, you don't have to do anything. Everything's going to be fine. I'll let you know, but you'll see a couple of emails and videos coming out from me in the coming weeks. But busy. Took a lot of work to get that deal done behind the scenes, which is awesome. Love working with them, with the new partner, tZERO. Those guys are awesome, and very, very exciting news. But anyway, the Seminole Casino is in Hollywood, which is close to Fort Lauderdale, Florida, right? So it's about a 4.5-hour ride. And this is a place I've been going to with my friends probably for 8 years, 9 years, long time. So we go towards the end of March, almost April, for a few reasons, right? March Madness, we could watch the games, and these are my friends that, 4 or 5 of them that I grew up, that I know for over 30 years. And also, mostly to see the Florida Derby, which is in Gulfstream Park, which is like a 10-minute ride from there. So we're all horse racing fans. And the Seminole Casino, we loved it. And it had this massive outside area, kind of like Disney downtown. This is when we used to go, right? So this is when we used to go. Now it's all renovated. I'll get to that in a second. But they had this whole outdoor area. We had stores, clubs, restaurants outside. You could walk around with your drinks. They had outdoor concerts. It was just a nice environment. It was cool. And then 5 years ago, they started renovating it. So they closed the entire outside area during this period, which kind of sucked for us, since that was one of the really nice perks of going there. Just hanging out, you can do everything. It's almost like this whole entire area by itself, inside its own property. And it's cool. So for 5 years, we didn't have that. And this is the first time I went there, because they spent $1.5 billion, and now they finally finished the renovations, first time I've seen it, to basically make their hotel look like a giant guitar. $1.5 billion. Might not sound like a lot of money these days, right? We're throwing around trillions left and right. But the Cowboy Stadium cost $1.3 billion to build, just to put in perspective, which holds 100,000 seats, built on a 73-acre lot. This hotel, these guys, $1.5 billion. Again, it's the first time I've seen it fully open. And man, it was impressive. Now, granted, pulling up to a building that looks like a giant guitar, especially at night, where you have these spotlights shooting, like, when you see with the Twin Towers that they have there. For every September 11th, they shoot those right up. Huge shooting right up to the sky. It's really cool. The renovations included a huge concert hall, much bigger casino, more rooms and suites, more restaurants, and a lobby that looks something like Vegas, even better. And massive with huge waterfalls. And inside, like the walls and everything, it was unbelievable. It was nice. But the cost to stay there, and granted, it's nice. So the cost to stay at this hotel, again, it was a late trip. Thought about it Thursday and said, let's just get away, get a babysitter. For Saturday night was $1,200 for the night. $1,200. I'm not talking about staying in the penthouse, outdoor cabana, private pool, full A-list experience. I'm not talking about that, no. This is for a normal room. And for 2 nights, Friday and Saturday, they quoted me at $2,300. $2,300. That was after taxes and fees, which, man, if you're traveling, are enormous right now. Especially if you use sites like Expedia, wherever, Priceline.com. You go on those things, they're going to say, here's the hotel price. Wait till you see the fees that they're charging. Holy cow. I mean, it comes to probably 20% of the of whatever you're paying, whatever you see there. It's like a little option you can click. It says full price with taxes and fees, and then it goes from whatever. You're paying $500, it's going to go to like $600 and change, $650. When I went to Dallas, it was an extra $200 in fees for 2 nights. I mean, it's insane. But $2,300 for 2 nights. I mean, I travel state all over the world. Put up at the Four Seasons, Omni, Ritz. I mean, that's when I worked for my previous employer. I always used to have like great hotels and conferences I used to go to. But these rooms, which are immaculate and nice, I mean, they were less than $1,000 a night back then. And maybe they're a little bit like in that area now of $1,200. But the Four Seasons, Omni, Ritz, Carlton, they were always located in vacation areas, high traffic areas where there's tons of hotels. Right? So if you don't want to be in a 5-star place with your family, there's tons of other hotels to choose from, which are cheaper, and that's cool. But where the Seminole Hotel is located, and it's Davie, Florida to be exact. It's listed as Hollywood. It's Davie, Florida. I know people who live in Florida for 20 years don't know what Davie is. Davie is but it's a shithole, at least where the casino's located. I don't know if I could say in a respected way. I mean, there's bars on windows everywhere. There's pawn shops, there's dope video boot stores, there's massage parlors. Not a place you want to walk around at night. But there's not really any hotels within 5 miles of this place to stay at. I mean, maybe a couple. And for me, I wasn't paying $2,300 for 2 nights for a small room that, my wife and I probably won't be in that much because we're going to be gambling, hanging out, and enjoying ourselves. So instead, looked for another hotel and found the Holiday Inn Suites about 12, 15 minutes away. And the total cost for 2 nights was $300. Pretty good savings there. And the room was perfect. You had like a little living area, and the room, it was beautiful. It was nice. Now, when we finally made it to the casino, we got there Friday night because there's a long drive. We saw that Guns N' Roses was playing there on Saturday. So, Guns N' Roses, we got tickets. Concert was pretty good. It wasn't great. It was good. I mean, Slash, and then you have AXL Rose. And by the way, I don't know if you saw pictures of AXL Rose. I don't want to say he looks like he's 80 years old because I've been insulting 80-year-old people. But he didn't age too well. I love him. He's great. Vocals were not great. You could see he had a lot of miles on him, but who cares? I mean, we're all singing Sweet Child of Mine, November Rain, and Welcome to the Jungle, and people going crazy, and it was awesome. It was a good concert. And it was in their new theater in the Hard Rock. And this theater is massive. It was massive. It was packed. I mean, 3 levels, general admission area included, which is the bottom area where you stand. And you have 3 areas behind you, and it was packed. It was sold out. We were in the general admission area, having fun, drinking beers. I will say, and this is, again, stock podcast, so I'm going to talk about the economy and stuff like that. The amount of money this place was making is absolutely insane. It was $7 for a slice of pizza. The line was like 50 deep at night, with a few places that were open like after 2 a.m. Just $7 for a slice, probably $4 or $5 for a Coke. Beers, I'm not talking about anybody, I'm talking about Bud Lights, was $7 on the casino floor. On the casino floor, which in Vegas, a lot of those hotels, I believe last time I went to Vegas a lot, they still give those to you for free when you're gambling. Not here. It's $7 a beer. I mean, you feel bad. I mean, you get a tip too. I mean, think how much that costs. I mean, it's $9 for a Corona. I think it's like $12 for a drink. But again, a lot of this stuff in Vegas, they give away for free. The new slot machines that they had there, very new and weird. Not like the Wheel of Fortunes or anything like that. And hey, my wife likes the slots. I play them with her. It would say, again, when you win, it's like huge win, and it paid you like $22, $25. Jackpots were extremely low. The max you could win was like $2,000, $3,000, $4,000 on some of these machines. And that's for betting $5 full amount and stuff like that. So it was just crazy. The 2 days that we were there and the slots we played, we didn't hit, anything over $50 once. And we played well. We did very, very well in blackjack, roulette. We did okay in. But it was crazy. I mean, we didn't see anyone hitting anything anywhere. You usually see a jackpot, they shut down machines. You see people at nothing at all. 2 straight days. Parking. We got there, parking, $30. And we valeted, since we stayed at someplace else, we valeted $30. And they were like, we need $30 right now. I don't think I've ever seen that before. You got to pay us now. There's probably so many people go in there, they get wrecked, they come out, they have no money. And they're like, I don't care. Just give me my car. I'm not paying you. But they were like, you got to pay it right now before they even parked your car, which I thought was pretty funny. And I'm looking at this place going, how could anyone, like an average family, go there and enjoy themselves? I mean, you can't unless you have $300 a person, I would think. I mean, table stakes were $25 and up. To stay at the hotel, again, was super expensive, yet it was packed. And when I called to book, I saw that there was a discount for Florida residents, just like it is in Disney and stuff like that. So I said, hey, look, can I get that discount? And they said, sorry, we don't have any rooms available for the discount, for the Florida rate. And to me, that was a little weird because it's not like it's a king bed and we have no kings left. You can get a 2 queens or whatever. You have rooms left, and I'm from Florida. You were just like, hey, F off. We don't need to give you that discount right now because we don't need it, which makes me think that it was really, really crowded, close to sold out. So people were paying those prices for the rooms. Maybe they booked earlier and it cost them a few $100s less, but if, on Thursday, they were trying to charge us $2,300. No discounts. We don't care. The hell with you. Insane. These guys are raking in the money, and it's crazy when you think about it. And maybe not so crazy when you think about it. Because the Hard Rock Seminole, it's built on property that's designated as Native American. Native American tribes are considered domestic sovereign nations, which means they're not subject to most state and federal laws, especially gambling authorities, like the Florida Gaming Commission or the Nevada Gaming Commission, if you're located in Vegas, where payouts by law must return at least 75% of slot machine wagers on average. Here, it doesn't matter. You don't know. There's nobody regulating them. Well, there is someone that's regulating them, actually. It's the tribal government of which the land was built upon. And they can have 20% average payouts if they want, and there's no one there to say, oh, too bad. That's significant. And when you have the people regulating the casino, right? So these are the people regulating the casino. These are the same people who are getting paid an absolute fortune, probably under the table, from these Native American casinos. And in order to qualify and get that tribal license, there's 2 things. There's actually about 6 or 7 things, but 2 things that I saw. Again, I did research on this, which I thought were interesting. But 2 clauses that you must do if you decide to build a casino on tribal land. The first, must donate to charitable organizations. I wonder how those are chosen. Probably chosen before you build and say, hey, these are the organizations. And help fund operations of local government agencies providing services to tribes. So, hey, here's a quick handout. It's not taxes, right? You're generating that for state, whatever, but it's basically throwing money to maybe the DOJ and FBI to make sure you don't come over here. Or when have you seen the DOJ and FBI raid a Native American casino? Ever. Never happens. Never happens. They say they're kind of like, they could come in, but they never will. They don't know what's going on. They have no idea. And they don't even care. Now, let's think about this for a minute. We talk about racism in the U.S., black, white, Hispanic. I mean, that's nothing compared to what Indians went through. In 1830, we passed, I can't believe this is the name of it, the Indian Removal Act. Okay, we actually called it that, the Indian Removal Act. I know it's 1830. Might have been better to come up with a different name. Maybe the Indian New Homes Plan, Indian New Neighborhood Assistance Program, but Indian Removal Act. I mean, our politicians are a lot smarter these days, using names like the Affordable Care Act, which is the most expensive thing in the world for Americans, accounting for, $1.3 trillion of our national debt. It means healthcare cheap for anyone that has a job or own their company, but it's the Affordable Care Act. It's fine. Or the Patriot Act. That sounds awesome. Patriot. Fills me with pride as an American. Yet it's a license for the government to track everything you do, every second of the day. If you think that's false, watch Dateline, which is all about murders now, right? All about murders. My dad was on Dateline, and so those watch segments, it was 6 different segments, when he picked stocks against a monkey. It was fantastic because a monkey was beating him at the beginning. Then it went on for like 2.5 years, and that wound up smoking him. But that's, I mean, he became, everybody knew who he was after that. That was pretty funny. I'll tell that story a different day. I think I told it a long, long time ago. But when you're watching Dateline, they always catch the guy that goes through the whole story. But at the end, it's the guy where, well, we looked at Google and searching, how to bury my wife without anyone finding out, or exactly where his last text was sent from based on a cell phone tower it bounced off of. I mean, they're tracking everything. They track it. That's the Patriot Act. But it's the Patriot Act. Such a nice, beautiful name. But the Indian Removal Act, this forced 125,000 Native Americans to leave their homelands, ancestral homelands in eastern United States, and go west to around where Oklahoma is. This is 1,000 miles away, covering 9 states. And most had to walk this, where thousands died from starvation, disease, exhaustion. But we basically came to America, Indians own the land, and we just said, hey, too bad. Get the F off. It's ours. Goodbye. Crazy. I mean, we all know the story, but when you look in details and you read about it, you're like, holy cow, like exactly how they did this. So now they're operating a casino with almost no government or casino regulations, which control payouts. It's a demographic where it's like, what, 98% non-Native American who are gambling, spending money? I mean, if you were in their shoes with that history, what would you do? Personally, and I know this shit happened like 200 years ago, but I would do everything in my power to make sure every non-Native American loses every single penny that they got. Seriously. It just makes sense. I mean, I'm the idiot that goes to the casino, to the Indian casino, but it just kind of makes sense, right? The way the whole thing is laid out. But man, Native Americans, these casinos, $1.5 billion in renovations for one hotel to make it look like a giant guitar. And these guys are like bigger than a Catholic organization right now. Yeah, filthy rich. Anyway, despite obviously losing some money at the casino, but saving a ton by staying at a property about 10, 15 minutes away, going to a Guns N' Roses concert, which I know all the young guys out there listening, men, female, young investors like Guns N' Roses, did you say? It was fantastic in our day and age. Think Machine Gun Kelly now, I guess. I don't know if that's a good comparison. Probably not. We had a lot of beers, had fun. It was definitely a nice getaway, definitely something we needed. But more importantly, what does this say to the economy? What does it say of what's going on right now, where we're seeing massive inflation, massive inflation, and it could get even worse, especially if we pass the infrastructure plan. Again, there's some Democrats on this that just make sense, that are like, let's hold on. It's a lot of money. This is something that can really crash the markets. Hey, we're seeing it right now in the marketplace. We're seeing what? What sectors are doing good during this sell-off? We're seeing financials explode and oil explode and technology crash. I told you on last week's podcast, it was with Daniel explaining why technology gets hit the most during inflationary environments, because these guys already have high margins. They can't really cut costs, and their profits are generated on the capex of everyone else, of how much they're willing to spend on advertising and everything else. And once those budgets shrink, that's the companies that hurt the most, which is why their margins suffer the most, because they're already super high. Where cyclicals are able to cut costs, it might not get hit as hard. But if you're looking at oil companies, definitely inflation related. You're looking at financials. Higher interest rates means, that net interest margin goes higher. There's a reason for that, because people are worried about this inflation thing. And if we happen to pass the infrastructure bill, $3.5 billion, which whatever, like, what is it? $600 billion dedicated to infrastructure, whatever it is. Where are you going to ship these raw materials? You have no containers. You have no ships. Everything's on backlog. Are you crazy? We can't ship anything right now. It's almost impossible to get anything in less than like 4 or 5 months. Most of the stuff's coming 6, 7, 8, 9 months. You all know this. What's going to happen? People are going to be fighting for raw materials. Prices are going to go up even more, raising prices across the board for everybody. That's when the shit hits the fan. Because again, the Fed, that's something the Fed can't control by throwing money at it. They have to do the opposite. They have to take money out of the market to control inflation. However, for now, we're okay. When I see things like this, we're okay. Discretionary spending. People paying $7 for beers, walking around with the beers. It's not like, it's not like you go to a mall and you say, wow, it's crowded, but nobody has bags. It matters if people are buying shit or not, right? You just pay a little bit of attention. It matters. See what stores they're doing. Like I say, I use Chipotle because even now when I go there, there's lines and they have pricing power. There's companies that have pricing power. Dick's Sporting Goods has pricing power right now. They're able to pass on those high costs. Nike, not so much. FedEx, not so much. They are raising prices, but these guys are getting hit really hard right now. And there's some restaurants, I told you, I tweeted, I went to one of my favorite pizzerias and it was closed Monday, Tuesday, Wednesday. I was like, it closed Monday, Tuesday, Wednesday, and it said due to the labor shortage. So it's not just we're cutting back hours and we're operating at 70%. Yes, you're going to get your food like in a half an hour instead of 10 minutes. No. They're actually closing their stores. They just can't get anyone to work. But keep an eye out for that. Because that's going to be the tell when shit hits the fan when you really need to get out. Not now. So, normal pullback. It's nice to see a pullback. This is normal for markets. Again, we have a government that believes that growth should go on forever and ever and ever, no matter, even if it excels higher than the historical rate, like homes, averaging like 2 to 3% increase annually historically. But we saw that in a credit crisis when you go up 20%, 20%, 20%, 5 straight years, you're going to revert back to the mean. That's when we saw the crash. But if we look now, it's, over the past, 70, 80 years when they track it, it's, 3%. But when you have exceptional years, which we saw at the S&P 500, where exceptional growth doesn't last forever, especially if you're accelerating growth, right? You're going to slow down sooner or later. You're going to have little setbacks. Every business does, from Apple to Microsoft. We've seen it across the board over the decades. But right now, be careful. There's going to be a lot of companies that are going to warn. We're seeing that. I'm looking at material companies, Sherwin-Williams, the shipping companies like FedEx. I mean, how can UPS not warn? Pepsi said, hey, you know what? Things are good right now. They have pricing power. It's Pepsi and Coke. Yes, you have other things, but Pepsi and Coke's in every single restaurant, and you're not going to take it out. Maybe you switch from Coke to Pepsi. You got to have one or the other. Can't go to any major restaurant chain and not have Coke or Pepsi. You have pricing power. They came out and they said, hey, things are good, and they raised estimates. Focus on the companies that have pricing power, because the ones that don't are going to lower the estimates significantly because their costs are going through the roof. Just to hire more people. It's a fortune. You're going to have to provide health care. It's one of the things I did a while ago, like 2 years ago. I did it before COVID with my phone store. I mean, 2 kids that are in there, I think, one of them has kids, but I provide health care for them. They're not going anyplace because they can't get health care anywhere for, at a place that fixes your iPhone and cracks screens. I didn't know COVID was coming, but it locked them in. I didn't have to worry about one of them leaving, maybe both of them leaving. Then I'm like, holy shit, I need employees. That's what's going on right now. So those costs go high. Your raw material costs go high. Just the cost of doing business go high. You have to raise prices. And if people are like, hey, you know what? I'm not going to pay like a ton of money to go eat at my favorite restaurant, which I was paying $70, $80 for my family. It's now $140, $130. I'm not going to go anymore. That's huge. You're going to see companies start lowering their estimates. And Ford, we told you about that. Ford sales were down 19%. Stock went up on that news. And this did not producing any autos. They just extended it even further for Ford. Those production cuts. And saying, we're not going to open our plants because we're not. I mean, Ford sells cars and they have no cars to sell. What do you think's going to, how are they making money? Well, let's just talk about our EV investments in portfolio. That's fine. And they're getting a pass for it. But everything I'm reading says 2023 now. That's when the supply chain should be mildly okay, early 2023. But remember they were saying it like right now would be the bottom? No freaking way. Again, I love Ford. I love their future. I love the investments that they made, not just the last $11 billion investment, but the investments, billions that they spent over the last 6-7 years I was telling you about from going to the Consumer Electronics Show. But if they're getting a pass for generating, sales 17% below, the comparable period last year, then maybe a lot of this stuff is factored in for some of these companies. I don't know. I mean, I like Ford if you're going to buy it and hold it for 3, 4, 5 years. But short term, I don't know. We'll see. But going to places like this and just seeing how much people are spending, discretionary spending, they're having fun. They're not changing their habits yet. You might see that in other areas. I want to hear from you. FrankCurzioResearch.com. I'm not seeing it yet, but we're going to start seeing it. Where people are talking about it and saying, wow, you should see how much this costs, you see how much this costs. I'm hearing that everywhere, but people are still going out. They still want to have fun. Because a lot of them are locked in their homes for such a long time. People are still going on like their first vacation since they're allowed to be mandated to stay home. You can't go anyplace. But these are trends you have to look for. Because I'm telling you, going into next quarter, we've seen a lot of companies already warn. Boston Beer's another. A lot of companies that reported kind of after earnings season. And now it's like the warning season. So we're going to get into the warning. You're going to see a lot of companies lower their estimates. And I don't know how anyone with supply chain issues could actually predict or provide a yearly forecast. It's difficult when you're not getting the materials, you're not getting supplies, you're not getting your products for 6 months. It's impacting some companies, but not all companies. So just be careful. If you're buying stocks on this dip, be careful. Because there's a shot when you have that growth. Look at Zoom. When that growth slows and you have that massive, massive premium that people are paying for your stock, just like Boston Beer, you get wrecked. You get wrecked, and it happens right away. 30, 40% decline out of nowhere, and you're like, holy shit, what just happened? So if you want to buy stocks heading into this quarter, just do me a favor. Buy small positions. Buy a third position. If it comes down, you can buy more. You improve your cost basis, right? You lower your cost basis. Or if it goes high and you happen to be right, at least you own it. But don't just go right in and buy full positions here. We're going to see a bounce back. I think we're a little oversold at these levels from September. See more volatility in October like we always do. But the holiday season is the best season for almost all these companies. And I don't know if they're going to get their products on time. I don't know if you're going to be able to buy the shit that you want to buy for Christmas. I don't know if that's going to happen. Because these issues are crazy right now. Absolutely crazy. There's a reason why Amazon's selling Black Friday stuff now. I don't know if they're going to be able to meet their estimates because they just don't have the products in inventory. Something to think about going into next quarter. Now, let's take a couple questions really quick. First one is from Joe. He goes, Frank, no one has done a better job than you of researching and analyzing COVID. I'm 74, had the virus in April 20 with no problems and will not be taking the jab in any form. I would advise anyone who is debating jab or no jab to listen to your fair, balanced, and well-considered commentary. Thanks for all the great work and the great team you have assembled. Joe, I appreciate that. I also get emails where I'll be fair and read some of them where, this touched a nerve and, just it shouldn't be mandated to put something in your body when you don't have the data in front of you. That's all I think. I think that's pretty logical and everybody could agree with that. I mean, I'm getting my second shot today and I have to because I'm traveling. I don't want to. Why? Because we haven't published data in the United States on the Delta strain and for me, what I'm seeing is that's impacting people who never had COVID before much more than people who had COVID already, whether you had the vaccine or not. And we were told 95% efficacy. We're great with the vaccine. And for me, that's, when they had the polio vaccine and stuff, you didn't get polio again. People got COVID again. Different strain. What happens if another strain comes out? 90 booster shots. What's going on? I thought once we did this, you were fine, but you're mandating it because another second study I saw, and this is, one of Israel, I forgot the other study, another country that has a very high vaccinated population, said the same thing. You have 5x more, 5 to 7x between these studies, more likely to get COVID if you're vaccinated compared to people who have had COVID already and not vaccinated. I mean, that's crazy. That means that people who are vaccinated have antibodies that's helping them out against the Delta strain, which means that maybe those people do not have to get to the vaccine if they don't want it. I mean, if you have the vaccine and someone doesn't have the vaccine, it's not impacting that person with the vaccine. It's not. But what I want to know is how long these antibodies last, which Fauci hasn't said. Gottlieb hasn't said. None of these guys said how long they last. We think they last, but it would be better to inject this thing, the fastest vaccine ever passed in the history of the world, into your body, where still we haven't really fully tested all the way through yet, telling you need booster shots, and that didn't even get approved by the FDA. Not even close. They were like, whoa. So just, again, I'm not anti-vax, which the anti-vax crowd gets mad, and I'm not, hey, you got to get the vaccine, but if you do have underlying conditions, get it. It's going to help you. Absolutely. But just want to be fair and balanced. I don't have an agenda here. For me, it's, provide great investment advice, safety of your families and stuff like that. It's, not promoting an agenda here. So I appreciate that, Joe. But again, not all the comments are positive. Some people are just watching the wrong things, the wrong shows, listening to the wrong people. I was just fortunate to have an amazing, amazing network of doctors and scientists that email me all the time. And it's really, really cool. So thank you so much for writing in. Last question really quick here is from Bryce. He says, hey, Frank, I was listening to your podcast early today and heard you mention you invested in carbon streaming private placement as well. Just curious on your thoughts of their reverse split after publicly trading for less than 2 months. Not sure if you saw last week's email from the company below. Trust me, I understand the part about the NYSE or NASDAQ listing. Just doesn't sit right with me. I enjoy hearing your perspective on this. So, if you're looking at carbon streaming, and Bryce also said at the end of this, I just hope we also don't see another bought deal or another private placement with warrants issued in the future. There's a couple of things here, Bryce. First, the company stock must be trading, I believe it's over 5, it could be 4 sometimes, to get listed on major exchanges. And once they list, you're going to see explosion of volatility. And that's why we're doing the same thing. We have volatility, liquidity, volume. Institutions could come into the stock now. They're not going to come in if you're trading over the counter. Same with us. That's why we're upgrading to a platform that is more liquid, right? Because it just opens up more options for us, which is awesome. And not only that, our investors should be able to buy and sell their stock. And right now, it's very difficult because there's not a lot of volume on an international exchange, which we're trading on right now. So it's exciting. So that doesn't bother me at all. They really need to do that. So, and when you're looking at any kind of split, reverse split, whatever, you're not changing the fundamentals, right? It depends on what the split is, right? So you're raising the price. Your share count is going to change, but when you look at the value of your holdings, it's going to remain the same, right? So that's really what you want to do. And they need to do this. So that's not a problem. And you say, I don't want to see a bought deal or another private placement with warrants. I wouldn't worry about that either. And a lot of these companies, they have a great balance sheet, carbon streaming. Again, that's publicly traded now, guys, if you want to take a look at it. But, raising capital is not always a negative. And I was in uranium royalty very, very early when nobody even heard of it at 25-cent financing, at $1 financing, and there was no warrants included. And it was like 2.5 years, 3 years before it came out, before it went public. And then later on, they went on to raise a lot of money at $1.25, $1.50, and both of those deals came with warrants, which are higher. I mean, I wasn't upset. I was in a lower price. So those capital raises, if they happen, whatever, if you're in $1 to private placement and it happened at $1.75, that's not a bad thing. They're bringing in new investors. They're bringing in money. They're raising money to buy more areas for carbon credits. But you look at uranium royalty, they went on to raise a lot of money, $1.25, $1.50. The stock was recently 4, as most uranium stocks took off. So in short, raising cash is not the problem. It's how management spends it, which can make the capital raise a great thing or a terrible thing. So that's what you have to look at. So those two concerns, no. Could there be other concerns? Yes, I'll let you know. But the people involved in this stock, there's several billionaires, there's Ross Beatty, there's a lot of great names who've got the same terms of a private placement across the board. These are very, very smart people. They just signed another 2 guys to their board. I just think it's a good long-term play. That the whole world, everywhere, they have to. They're going to be paying for these carbon credits. This is the way it is, even if you agree with climate change or not. Again, I had the whole discussion in last week's podcast, but this is something you really have to look at, and this is one of the ways to play it, along with, there's other plays as well in the security token space, which I will get to future podcasts, because a lot of companies are raising money in that space to really focus on carbon credits and that market as well, which will be absolutely enormous. Okay, guys, any questions, comments, feel free to email me, whatever, frankcurzioresearch.com. Thank you so much. Really appreciate all the support. And I'll see you guys tomorrow. Take care.